Welcome and thank you for joining me. If you're involved in government contracting, you've probably encountered contract language requiring one party to be named as an additional insured. It's a common requirement. Unfortunately, it's also one of the most misunderstood areas of contract risk management. Many contractors believe that once a certificate of insurance shows an additional insured, the requirement has been satisfied. In reality, it's not always that simple. Today, I'd like to explain what additional insured status means, why government contracts include these provisions, several practical considerations every contractor should understand. Let's begin. What is an additional insured? An additional insured is an individual or organization added to another party's liability insurance policy through an endorsement. They receive certain liability protection under another's policy, subject to the policy's terms, conditions, exclusions, and endorsement language. Government agencies, prime contractors, owners, and project managers often require additional insured status. The objective: help allocate risk according to the contractual relationship. Why government contracts require it? Government projects often involve multiple organizations, federal agencies, prime contractors, subcontractors, engineering firms, construction companies, equipment suppliers, professional consultants. Each organization has different responsibilities. Additional insured provisions help define how liability protection is intended to function if claims arise from the work. Certificates of insurance are not the policy. A certificate of insurance is simply evidence that insurance exists at a specific point in time. It is not the insurance contract. It generally does not modify coverage. It generally does not create additional insured status. Actual protection comes from the insurance policy and its endorsements. Review both the contract requirements and the policy language, not just the certificate. Contract language matters. Every government contract is different. Some require specific additional insured wording, primary and non-contributory coverage, waivers of subrogation, completed operations coverage, ongoing operations coverage. Simply requesting additional insured isn't enough. The contractual language determines what may actually be required. Understand these obligations before work begins to reduce disputes. Prime contractors and subcontractors. Prime contractors often require subcontractors to provide additional insured protection, helps transfer operational risks and establish responsibility, supports the project's risk management structure. Problems often develop if subcontract agreements don't align with the prime contract. Reviewing subcontract insurance provisions is just as important as reviewing the prime contract. Don't assume every policy responds the same way. Insurance policies vary. Endorsements vary. Carrier forms vary. Coverage triggers vary. Never assume every additional insured endorsement provides identical protection. Review the contract, the policy, the endorsement, the scope of work. All four should work together. Documentation is important. Maintain organized documentation: contracts, subcontracts, certificates of insurance, endorsements, policy renewals, change orders, insurance correspondence. If a claim occurs years later, these documents can be essential. Good documentation supports better claim management and clarifies responsibilities. Risk management beyond compliance. Many organizations focus on satisfying contractual requirements. They collect certificates, obtain signatures, check boxes. But effective risk management goes further. It asks, does the insurance support the contract? Do subcontract obligations align? Are endorsements consistent? Are responsibilities clearly defined? These questions become far more important after a claim than during negotiations. Conduct regular reviews. Projects change, scopes expand, subcontractors change. Insurance renews. Whenever key project changes occur, revisit insurance requirements. Confirm additional insured status remains appropriate. Endorsements are current. Coverage limits remain adequate. Contract obligations stay aligned. Periodic reviews identify issues before they become disputes. Final thoughts. Additional insured provisions are an important part of government contract risk management. They work best when contracts, insurance policies, endorsements, agreements, and responsibilities are aligned. Rather than viewing additional insured requirements as an administrative task, make them part of a broader strategy for managing contractual risk. Careful review can strengthen risk management and improve preparedness for the unexpected. If you'd like to learn more about government contractor insurance, contractual risk management, or Defense Base Act insurance, visit www.montridgeinsurance.com. Thank you for watching. If you found this webinar valuable, please subscribe, like the video, and share it with others in the government contracting community. I look forward to seeing you in the next webinar.